Startup in the real estate syndication space.
Our mission is to create transparency, provide liquidity, and offer market intelligence that can help you succeed at a higher level.
To get involved, join our pre-iShare sponsored Facebook group.
Together, we can raise the standard. Hey, what's up, everybody? We are on a live edition of the Syndication show, and I've got a gentleman with me who is quickly becoming a friend. We got to spend some time together last time you were here in Salt Lake City. And Vadim, you're with Fairwinds Capital Partners. Real brief intro on yourself, and then let's chat about what you've got going on.
Yeah, thanks, Christian. Good to see you again. Looking forward to the next time I'll be in Salt Lake. So quick intro on me and the team. We started Fairwinds Capital Investments just over 2 years ago when we were active duty naval officers. We brought on a fourth partner who's a former merchant marine. We gave him, kind of a pass, let him in, see how he's doing. And he's done great for us, tying in the naval service traditions. And two of us have since left the Navy. Corey has retired. I took off and said, I'm good. I'm going to live my best life on the civilian side. And then Jonathan still has just over a year left before he retires at 20 years. And altogether, we've brought our military experience as well as our real estate experience to helping families live their best lives, turning around apartment communities that are in not so great shape and making them a lot better, as well as helping our investing partners and our general partners live their best lives as well.
Very cool. Well, Vadim, it was fun. Some of the conversations we were able to have about just helping other people and, living the lifestyle. I would love to, understand more about what you guys are doing in the current market, and more importantly, why, you're taking on transactions right now. There's a lot of people sitting on the sidelines, both syndicators and passive investors. So maybe before we jump into that, some of what you wanted to share today, talk a little bit about that as well. Why are you guys taking action in this market? What makes, the deal that we're going to talk about in particular, good for this environment? And what advice would you give to, and I know I'm packing some stuff on you, but it's all the same, vein here. What advice would you give to people that are in the market right now and wondering, should I be sitting and waiting for things to change? Or what opportunities should I be moving forward with?
Yeah, great questions, and no worries on packing it on. I'm used to that from the Navy side of things. Just give me the weight, I'll carry it, and the team will carry me as well. So on the market, we're really looking at the fact that there are still deals out there. There's still really good opportunities out there. They're just harder to find. Just because they're harder to find doesn't mean we stop looking for them. We're going to continue to look for them. We are continuing to look for them. We have one that we'll talk about shortly. And it just means that we have to be even more particular about the kinds of projects we consider taking on and ensuring that we're accounting for any new market risks, as well as really just timing. I mean, that's the biggest factor of anything in any deals is timing. You could have a good deal 20 years ago, but if you didn't get it 20 years ago, then who cares how good of a deal it is? If you're able to get in on a good deal today, great, then you got a good deal today. And that's all you can do is control what's available and what's possible for you today. And as long as you can carry it into the future, you'll do all right.
Awesome. And we met when you were in town because you were actually on the Syndication show. We're going to release your episode here soon. So one of the first people to be in studio with us. So thank you for that. It was a lot of fun to have you here. And for those that are watching this that may not know what pre-iShare or the Syndication show is, pre-iShare, quite simply to boil it down, we create liquidity for the passive investor, which also helps sponsors. And we also offer other financial products. And I call them key financial products because they're really, it's money when you most need it in key situations. So things like top-off funding and pref equity are things that we do with pre-iShare. And so Vadim came in, kind of shared some of their background, and it's really cool to see what you guys are doing with Fairwinds. First of all, I want to say from everybody on the team, thank you guys for your service, every single one of you. That's the reason that we have the freedom in this country, and I'm grateful for all of you that serve. And now let's talk about your deal. You kind of wanted to come on here, and we wanted to have you come on here and just share about deals so that other people can get perspective of what's really going on, and get, kind of see that hope that there are good deals still in this market. So we'd love to hear, more about it. I can share my screen, which has your PowerPoint if you'd like. You just tell me where to go from there, and we'll hit it.
Yeah, please. Yeah. Let's show that first slide and I'll talk through it.
There you go.
All right. Beautiful. Thanks, Christian. We got Cardinal Park Apartments, which is in a beautiful suburb of Cleveland, Ohio, suburb called Mentor. It's a beautiful town. It's actually one of the more well-off towns in the area. I'll show you the market demographics shortly. It's got 57 units. And the quick story here is that the current owners got in over their heads and are ready to sell to rescue their team and their investors. And we're coming in at a pretty great price. And based on their T12 and the purchase price, it's at about a 7 cap on purchase. And we're looking to do some very, very straightforward things. We're going to upgrade the interiors, upgrade the operations, run the whole thing like a really nice community. It's currently a C-class apartment building. We're going to take it up to a low B, and we'll just run it better. There's nothing too sexy here. It's really just about better operations, better quality of interiors, and nicer community living. I'll go to the next slide.
So straightforward multifamily. By the way, I know you're going to share your disclaimer, so let me make sure that I put our disclaimer out here as well. Just so you guys know, we are not promoting Fair Winds Capital nor this deal. As far as Pre-iShare is concerned, we're not a broker dealer. We're not getting paid any sort of fees. We're just simply having Vadim come on here because we have pre-approved him as an approved sponsor with Pre-iShare, and so we feel comfortable that by him sharing transactions that he's in the middle of, it should give inspiration to others that are in the market and want to transact. And so, any relationships that may come from this have nothing to do with us, and we're not going to facilitate any of that. So I'm just trying to think of what our Brad would say. Brad is our attorney and our legal counsel. So just kind of covering all of those bases. We are not promoting this deal. We are not broker dealers. We are not collecting any sort of fees. We're just simply letting Vadim share to our audience and his what he's got going on.
Absolutely. And then the other disclaimer is on behalf of the SEC and our team. It's not a solicitation for securities. We're not offering any promises. These are all projections. And please do your own due diligence before exploring this opportunity further. And we will go ahead and jump into the rest of the deal.
All right. Where do you want to head? Just the next slide?
Next slide. Perfect. Oh, and on the disclaimer also, this is only for accredited investors. So if you're unsure of what an accredited investor is, reach out. We can talk you through it. And yeah. All right. Table contents. Go to the next slide. All right, we got the main team on this project here. Tammy, Mahir, Ethan, and Austin. Tammy's got the bulk of the asset management experience in this market. And Mahir is actually the one that brought us along for the deal. Mahir and our partner, Jaspreet, are pretty close. They've done quite a few deals together in the residential space. And this will be our first partnership on the multifamily side, team to team. Next slide. This is the Fair Winds team for the board of directors. We've got Jonathan, Corey, myself, and Jaspreet. On our experienced metrics, we've got quite a few years in the real estate space. We've got quite a few years as well in the military leadership space. And we've done 9 syndication deals it's been about 3 years now. And we've got some pretty good returns on 2 of those that have gone full cycle. And we're sitting at nearly 800 units under management, looking to grow that even more throughout this year. On the property management team, we've got a great team run by Philip from Dwell Property Management. They've done some great work across the country and they're experts in the 10 to 100 unit space. That's really where they thrive. They found that there's very little professional management in that arena, so they've taken upon themselves to stand out as those professionals. We're excited to have them on board. That's the CEO, Philip Vera. Go ahead, next slide. Yeah, core values for all of our business projects is, this one in particular, is transparency, operations, and integrity. We are transparent about what we're doing. We're transparent both with our investors and our residents. We want operations to be uplifted in a way that makes it a place to thrive, not just to live. We want this property to be a community where people are excited to live and then tell their friends who tell their friends. And now we've got a whole waiting list of people excited to live on site and with us. It's all about integrity. We're here to really take care of the community, take care of the property, and improve the whole neighborhood, really. And that'll lead to improving the entire town, and that'll lead to improving the entire Cleveland MSA as well. We've got big picture vision, and this is just one stepping stone into that. The offering itself, we've got a purchase price of $4.6 million, looking for equity at about 1.7, and pretty standard hold period, 2 to 5 years, pending the market. As most people know, over the last couple of years, it's been all over the place. We're anticipating it leveling out over the next couple of years, and pending on how that levels out, we may be able to sell in 2 years, or maybe we'll do a refinance at year 2 and then a sale in year 5, which is the business plan we have modeled later in this slide deck. It's a beautiful C-class property in a B- neighborhood. And as you can see, 57 units, average rent $834, built in the 1960s. It's looking pretty good. We've done all the due diligence on it as well. And we're going to be upgrading all the interiors. We've got pretty solid pro forma for year 1. I'll show you in a moment. The current average in place rent is $834. The market rent that we're seeing in this area is about $1,100. And so we're quite conservative on the rent projections. And we're going to be focusing on really improving these units with new flooring, new paint, new LED lights for energy efficiency, updated appliances. Depending on the quality of the existing cabinets and countertops, we'll replace some of them. Some of them will just have some paint and new hardware, full bathroom refreshes. And this will be a really nice place to live. We've actually asked the current owners to stop their upgrades because their upgrades are below what we would want to do. So we're asking them to save their money and time and let us get on with our quality of upgrades. Quick background on the city of Mentor. It's actually the home of President James A. Garfield. He's got a nice little family home there with, I think it's become a museum now. And it used to be the rose capital of the world. In the meantime, it's turned into quite the healthcare services area with the Cleveland Clinic and a few other associated hospitals and universities. And on the next slide, you'll see that we've got a pretty solid financial sector, educational services sector, government services sector. And there's a lot of manufacturing and port services due to the Port of Cleveland. So we've got a pretty strong economy in this whole area. Pretty steady population growth, nothing crazy, but it's steadily increasing. Households are steadily increasing. And looking at the housing numbers, there's a lot of homeowners, and the rental prices actually are below the cost of home ownership. And so we're tapping into a strong niche here where just in the 1 mile radius, you can see that we've got I think that says 76,000 average income, and a 2 mile about 82,000, and a 3 mile, I think that bumps up almost to $90,000 average annual income. So this is a pretty affluent suburb of Cleveland, and we're providing filling in a need for apartments in that area. As I mentioned, we've got 834 average annual rent in place, and then the average cost are really just mortgage, not even cost of home ownership. That's just to own the mortgage on a home. On the average home in Mentor is about $1,300. So we're filling in and offering a pretty sweet bargain. This map is showing you that there's this beautiful commercial area that's just down the street from this property. You can pretty much walk there. And it's got a whole range of quality shopping centers. You've got all these home goods. You've got Marshall's, Old Navy. You've got some sporting goods, some restaurants, some banks as well. Next slide. Thank you. On the business plan, as I mentioned, we're doing a considerable amount of CapEx on the exterior as well as the interiors. We'll be replacing the HVAC systems, water heaters, signage, improving the parking lot, landscaping. There's going to be upgraded laundry facilities, as well as some community features like a dog park. And we'll be hosting community events on site as well. Next slide. Rent comps. As I mentioned, average market comps are sitting at about $1,100, even coming close to $1,200. And we're targeting about a $950 to $1,000 rent in 4 years. We're taking our time with our projections in terms of increasing these rents. And ideally, our projections are quite conservative, and we're able to actually get into these higher rent bumps for the higher values, the actual quality of living that we're providing. These are the different ways we're going to be able to increase the income on site. We're going to be taking care of the property better. So we have professional property management in place that's going to be running this very efficiently. We're adding upgraded laundry facilities on site that we're going to be charging for. Those will be standard digitized laundry services. So they'll be able to pay with a credit card. They'll be able to actually track when their laundry is going to be ready. They'll be able to see which laundry machines are available and when they'll be available. We'll be charging pet fees, so ensuring that anybody with a pet can live there and is also paying appropriate fees to take care of any classic damages from pets. We'll have vending machines on site with some quality products, not just random sodas and bad snacks. We'll have the good stuff in there. We'll have some storage lockers on site. We'll actually even have package lockers, so that way people will be able to have Amazon deliveries and everything securely stored. And we'll be doing some utility bill backs with utility charges. And that usually results in a pretty nice decrease in utility expenditures, both for us and the residents on site, as well as ensuring that the residents are paying for the utilities they're using. That'll take care of that'll help us reduce some expenses. We'll deep dive. How deep do you want me to dive into the underwriting?
I mean, it's up to you. I would say high level for this was probably good. I'm sure we've got a few live folks on the line. If you guys are here live, just give us a little hands up or whatever. But if you guys are most likely going to be watching this for the recordings, then give us a smiley face or something. Let us know whether you're watching it live or the recording. But yeah, I'll let you kind of take it, but probably high level for this. And then I'm sure if they want more info, we can give your contact info at the end and they can reach out to you.
Yeah, sounds good. So as I mentioned, we're looking at 57 units asking price is actually 4.6. We've managed to get a closing rebate of 150, so that takes our net purchase price down to 4.45 million.
Does that come from having them stop their work that they're doing and just giving you the money instead?
I don't know how they're going to choose to give us that money, but that's probably part of it.
Okay.
Yeah. Do you mind going back one slide? Perfect. So 78 grand a unit. All the numbers that go into the loan. We've got a 5-year term with an 18-month IO period. That's going to allow us to really get into stability of the property before we have to pay the full mortgage on it. 18 months should be plenty of time for us to turn these units and take care of everything. We're raising the actual construction funds, a good chunk of them, as well as getting a actual construction loan on it. So we have a mix of funds between the raised funds and the construction funds to take care of all the rehab and CapEx. And we are looking at pretty solid numbers on the projections. I mean, with average monthly rent that we're targeting is $1,000 a month. And we've got experience. So Tammy and the rest of the team are quite experienced in this market, and they've managed to hold a few properties in the area that are achieving about 98% occupancy. And so we're targeting 93% occupancy, which is below that. So find that pretty conservative. And we've got all the other income in that affect the other income line. And since we're also decreasing expenses, this should turn out to be a pretty good deal. Looking at the partnership breakdown and the investor return projections. So we're splitting this up as a 70-30 split for Class A members, our limited partners getting 70%, and the GP team getting 30%. We're offering an 8 pref, and that does accrue. And so first year, second year, third year, fourth year, fifth year, you're going to be getting an 8 pref. Got asset management fee in there, capital transaction fee. And we're anticipating cash flow year 1. So we're expecting this to be pretty good right from the get-go with a pretty healthy cash on cash year 1 of 8.5, so above that pref rate. And then a total average annual return of 23% with a total return of just about 92% on the life of the project over 5 years. Here's the breakdown. Here's our capital stack. Should be pretty easy to read. If you've got any questions about this, happy to answer them when you reach out. We've got our planned improvements. A good chunk is going into improving the interior unit quality of living. That's replacing the HVACs. That's turning the units to our quality of upgrades. That's replacing the water heaters. And we've got a nice contingency built in there on top of the parking lot repaving, the walkway repairs, and the new signage we'll be putting into place. Next slide, please. Thank you. So it might be a little hard to see. This is a breakdown of the actual financial projections. Again, if you have any questions on this, please reach out. Happy to dive into this a little deeper. This is our tiered equity structure. A 70-30 split, as I mentioned previously, with an 8 pref and a $50,000 minimum investment. If any of this entices you and you like the business plan, please reach out. We'd love to chat further and get you in on the deal.
Very cool. All right, so I'm going to stop that share. And Vadim, now that you've shared the numbers, you've given the breakdown of the deal, help people understand some of the terms in here. You know, if somebody's a little bit new into this, and they understand multifamily. You basically have an apartment complex, and I'm sure people have seen it where it says under noon management, right? And oftentimes that's probably in a situation like that, like this, where there's been a buyout. And I know that you guys have a little bit deeper why behind how you're creating a better life for the people living in your apartments. So just talk to that a little bit.
Yeah, happy to. Great question. So, which terms do we start with? So I'll just hit the overview. With apartment investments like this, we're looking at improving the actual operations of the property. We're looking at increasing the quality of living on site, and that comes twofold. One of that is actual physical upgrades. Right, we're upgrading the interiors, we're upgrading the exteriors, the walkways, the HVAC units, the water heaters, the flooring, the cabinetry, all the stuff that goes into just the basic physical quality. We're also upgrading the more experiential quality. We're improving the operations of the property with a property management team that cares, with ownership that cares, and that goes into everything that the residents are experiencing living on site. So everything from the process of paying rent to the process of requesting and experiencing actual maintenance repairs. So any issues inside the units, any issues outside the units, having quick turnaround times on any of those repairs and those requests, having a maintenance team that cares and stops by and knows the residents. Same thing with the property management team, getting to know the residents and appreciating what the residents need and want, and then providing them. So yeah, I think I hit the good overview there.
Yeah, absolutely. And then from an investment standpoint, I know that you seem like you're traveling all over the place all the time. Talk to what real estate can do as far as creating a lifestyle, and then maybe you can speak to, you don't go on vacations, right? You go on business trips. So you're always going to these different conferences, but you're fitting in fun along the way. Talk a little bit to some of the reasons that you're traveling and some of the conferences that you're going to.
Yeah. So lifestyle is huge for me, and it's really a big part of what we're providing to our partners and our investors. And we firmly believe in, if what you do is fun, then it's not really work. Sure, you got to put in hours. We all do. We all have to put in time and sometimes put our heads down and maybe give up a few parties or time with certain people in order to take care of what needs to be done in the moment. But overall, if we're having fun, then it's fun, and it doesn't feel like work. And so that's the lifestyle I try to model for others, and by living it myself. When I was in town a few weeks ago, I was there for a conference, the Best Ever conference, and the days before that, I snuck in some snowboarding. I didn't really sneak it in. I was very happy to tell everyone I was going snowboarding. It was a great time. And on the slopes, I actually met some investors and met some other operating partners, and actually even found new partners. I had mentioned to somebody I met on the gondola that I was an investor and I was actually about to go to Houston. And somebody else on the gondola mentioned, hey, we actually live in Houston. We're looking to get into apartment investing. Can we reach out to you to learn more about how that works, and maybe we'll partner with you? Absolutely. What a great day on the slopes to turn into a stranger into an investor.
Absolutely. So it looks like we do actually have some comments here as well. One of which is where can they get the offering docs? And so how do people get a hold of you? Do you have the chat? Can you type right into the chat how people get a hold of you?
Yeah, let's see if I can do that. I can't. So let me share the link to our page. One moment on that. Here we go. I believe.
Okay, there we
that
go.
Show up for you?
Let me just copy that and throw it in right here. All right, so there's a link for those of you who are asking. And now, being that you're going to these conferences, you're talking with a lot of other investors and syndicators and industry professionals. what are you seeing as far as market sentiment right now? I mean, I want to kind of talk about what the feeling is overall from those that are in your shoes investing.
Yeah, I mean, the market sentiment generally is that nobody knows what's going on. Nobody knows what's going to happen the next day or the next week. This is one of the most volatile markets that has been around. And generally, from the experience consensus, what we've heard is survive and get to the other side, and then you'll be all right. And that's where I think a lot of people are struggling, is just the survival portion. Some people have taken some very risky loans over the last few years that are coming due, and they're struggling to refinance and make those numbers work. At the same time, there's markets where there's other uncontrollable factors, like certain, if somebody didn't get a cap rate on their loan product, then they're certainly struggling in today's interest rates. And on the other hand, a lot of inexperienced investors are just wondering where to get started. Is now the time? And one of my favorite partners shares this all the time. He says, the best time to have bought real estate was 20 years ago. The next best time is today. Do you wait to buy real estate, or do you buy real estate and wait? And it's much like any other investment. If you're in it for the long haul, buy a good deal today, hold it for a while, and you'll be just fine. If you buy for fast cash, that's where people get burned, just like any investment, any asset class. If you buy for quick cash, that high reward also comes with that high risk. But if you buy for proven strategies and proven terms, then you'll be all right.
Yeah, I think this answers the question. I noticed that it says here, why won't the deals just get better? I'm not sure what that means. So Facebook user to maybe give us some insight, but I think this is what you're talking about is, really it comes down to the deals get better by you doing better and focusing on long-term proven strategies. Cash is not king, cash flow is king. And you guys are proving that because you're doing a lot of these deals without using your own cash, but you're creating cash flow for both you and your passive investors.
Yeah. And that's all while we're taking care of the property and taking care of our residents. I think a lot of people will get hung up on, well, if you're a landlord, then you must be bad. Well, no. Landlords can be good people. We are good landlords. And we provide that by actually caring. And the more we care, the better the property really does from a turnover perspective, from a demand perspective, and from a community perspective. We're able to then take care of the community by taking care of the residents on site, which then leads to a beautiful trickle effect throughout the community.
Yeah, because you guys have really two sets of customers, right? You have the customers who are your tenants that are wanting to live in your properties, and you have your customers who are the investors who are investing in these deals. And so how do you manage the needs of both of those?
By taking care of the residents first. I mean, we're going after proven business practice. We know what the income should be. We know what it can be. We know what the expenses should be and can be. And we target sound financial strategy. And by taking care of the residents, we hit our target return metrics. And then within those target return metrics, we have enough to share with our investors. There are plenty of deals out there where we can certainly take care of residents and make no money. However, we need to make money to survive as well. We need money for our investors. And so we go into these deals where there's both an opportunity to improve the quality of living, as well as there's actual, so to speak, meat on the bone financially for us to make it worth our while as well.
Yeah, very cool. All right, man. Is there anything else you want to share on this Sunday before you go out there and enjoy the rest of it?
That's it for me. I could talk about this all day, all night long. So give our viewers a break, and we'll hang out again soon.
Sounds great, man. Thanks for being on. We'll talk with you soon.
Thanks, Christian.
Syndicators and sponsors. Do you want to get more exposure to accredited investors and people that can invest in your deals? Pre-iShare specializes in just that. but you have to become an approved sponsor. There's only 50 spots available. Reach out to us to find